Hey everyone, this is Mark from Stocks and Cash. It's Tuesday, February 27th, 2018. I'm here with your market update. I'll go over my holdings and then provide some potential setups for tomorrow. So today was quite a wild ride in the market. We had some ups and downs and finally finished the day down and down pretty hard. Um, let's take a look at the SPY. You can see, we opened here approximately, where we closed yesterday, started to take off a little bit. And then, later in the day, I think probably around 2 o'clock, we just kind of started taking off downward. We filled the gap, and in the last 5 minutes, we just pushed down below it and closed. Um, it's a bullish engulfing candle. Doesn't necessarily mean that we're going to reverse this trend, but it is possible. I mean, it is a bearish signal for sure. But until there's confirmation that we're going down further, it's hard to say. This orange box is a new kind of warning zone that I've drawn. This is in case this is a top here, of this trend, this little, reversal here. If we want to retrace this move here from here to here, this is the zone where we could see some support from the Fibonacci retracement levels. This trend line I drew, it looks nice. It looks like we're kind of close to it, but it's kind of deceiving. If we do bounce here tomorrow, then this trend line could be considered real. But right now I'm just basing it off of this big black candle and then these two candles here. Those are the only two real points. This candle hasn't touched it yet. There's no follow through on the day, so it's really hard to say, oh yeah, this is this nice little trend line that hasn't been broken yet. This trend line might not be real. 2 points form a line, but 3 or more form a trend. And so that's why I'm saying this is just kind of an artificial line here. So where do we go tomorrow? Well, it depends, right? We have some support here. We have our exponential moving averages. The 21, the 8, and the 55. I did say yesterday we've gotten kind of away from the 8 EMA, and stocks, or ETFs, candles don't like to be too far away from their 8 exponential. When they get too far away from them, they kind of pull back or hold tight until the 8 EMA kind of catches up. I would have liked to have seen this gap fill and then a bounce when the gap filled. Again, that didn't happen. So it's kind of a mixed bag in the sense of, could we bounce here and go higher? Absolutely. But we could also kind of break through and come down, and retest maybe these lows, which might not be too unhealthy, the 270 area, and then bounce and go higher. Or do we come down and test, this low or this low here, the 253 level? It's certainly possible. Back in, I don't know if I can zoom out far enough. Yeah, so back here we had our double bottom, kind of came up and then had another double bottom. This is kind of a V bounce. We've seen a lot of V bounces lately. Here is one back in, what's the time frame here? June of 2017. We kind of were up. We were far away from our trend line, bounced off of the trend line and continued on upwards. Now, it's not exactly the same, pattern here because we had a lot of bullish candles. We were below our moving averages. We had only just broken through them. What we see here today, and there was no bearish engulfing candle like we saw back there. We're kind of meandering around here, trying to find our footing and to go higher. So it's not an exact comparison, but V bounces are possible. This would be like a V bounce. We just keep on going. We don't come back and test this low. But again, like I said, back here we did have a double bottom, had another double bottom. So is a double bottom possible? Certainly. It doesn't mean it definitely will happen, but it's something to look out for. If the markets do kind of roll over and we break through the 55 EMA. Really, if we break through the low of this candle here on the 22nd, I'd be a bit concerned that this thing might continue on further down. I did buy a couple of puts on the SPY just to protect myself a little bit because I am bullishly mostly in my trades, which we'll talk about shortly. So, just trying to hedge my bets a little bit and, have a plan that I can execute and that will work well. So taking a look at the Qs, kind of a similar day to the SPY. Um, we touched pretty much. Let's see, what was the high here? 170.73, 170.95. So we missed the recent all-time highs, by only a few pennies. And then we got smacked down. But again, we're coming back to the 8 EMA. The thing about the Qs is that this gap did not actually fill. I'm looking over here at H, which is the high. That high is 168.17, and then here, this candle, I'll be looking at the low, 168.21. So we missed it by about 4 cents. Gaps typically like to fill, so I wouldn't be surprised if we bounce, that we come back and maybe fill this gap, maybe test the EMA, and then try again to break out. Our warning zone here and resistance is now our support warning zone. For the time being, if we decide to pull back, we're essentially the same move here. These lines don't change all that much. MACD is still bullish. RSI is a little bearish. Stokes are bullish. There's certainly the opportunity for this to come back down. I think worst case, what I'd like to see worst case is we touch the 8 EMA, or maybe even this, this consolidation zone here, which is around 164, before moving higher. Heck, I'd like to see us just bounce tomorrow and continue on, but it's hard to say. Volume was pretty average, like it was for the last two moves up. So no real read on what volume, what that's indicating, I guess. So I don't know that it's all doom and gloom, but again, I bought those protective puts. My portfolio was a little red today, a lot red to be truthful. Down 20% on some of these trades, or more even. Just because I was confidently bullish yesterday. I even bought some more things, including waste management. What was the other one? Pardon me. DGX. So why don't we start taking a look at some of my holdings right now. Tiffany's. Again, looking great earlier in the day. Did not close so great. It actually broke through the exponential moving averages, which obviously is not a good sign. We did kind of break out here, had a sideways candle that even bounced off the 21. Things were looking good in the morning, but then it just shot down later on in the day. Stokes look like they're trying to roll over. The only silver lining is that volume was not very strong here. So was this move real? I don't know. I did try to draw another ascending trend line. Again, I don't know how real it is necessarily. It's this point here, the low of this big white candle. These two guys here, and then that's only 2 points really. So if this comes down tomorrow, touches this trend line and bounces, then the trend line would be considered real. And we could say that, hey, as long as this trend line stays intact, Tiffany's is still going to be moving upwards. So but until that happens, we could keep on coming down and get down to the 100 simple moving average, maybe test these lows potentially. So I've got my stop here around 102 or so. It's only about a 40% stop, but I'd rather keep my losses as small as possible while still giving the trade room to breathe. And so that's kind of where I'm going to put my stop on Tiffany's. Another one, Caterpillar. Very frustrating. It was up pretty nicely today, and then just closed down, kind of back into this warning area here. Now this warning area doesn't necessarily act as support. This was resistance based on this this leg here, this move. So if I was going to redraw, it would be from the low of this candle to the high of that candle if we do start rolling over, to kind of see where our maybe not warning zones since we're going down, but support zones if it comes down and rolls over. That being said, again, we're above the 8 and 21 simple moving averages, above the 55. So I do think there's opportunity for Caterpillar to bounce off the 8 EMA, continue higher, but it's going to depend on what the overall market is doing. Let's take a look at BABA. BABA was pretty bad right from the start. Very early It had a little bit of a a wick, but overall it was down most of the day. It didn't have as rough of a close as some of the other stocks, but Stokes is trying to roll over. Volume was pretty strong in this bearish move. MACD is looking like it wants to roll a little bit. And if I try and draw a trend line, which this one looks more realistic because I'm going to hit a bunch of points, it was broken. All right, so I touched here, here, this guy, the wick of this candle, wick of this candle. So this was a real trend line. It broke today pretty severely. The 21 EMA is 187.47. We closed at 188.20. So give myself about $1 or so risk. Or if I really wanted to be daring, it come down to 185, which is the 55 EMA. I'm not sure if I want to risk that much money. I think comfortably I can get out at the low of today's candle, which again doesn't give me a whole lot of room, but I'd rather be safe than sorry and get back in a better position that I'm more confident in. MasterCard. Tried to move up, same story as the other stocks, came down, filled this gap here. Could bounce off the EMA, we don't know. MACD is not looking so healthy, might roll over. Stokes are kind of meandering up here in the overbought area, and RSI is trending bearishly. So MasterCard is still pretty strong. I don't expect it to just kind of roll over too quickly if it does. But definitely looking for support here at the at the 8 EMA, which is at 174.56. So give myself another $1.50 or so on this particular trade. Some others that I get into today, Waste Management. This stock's been pretty strong, as I mentioned yesterday. Not super worried, although that's not the prettiest candle. But again, we're quite a ways above the 8 EMA. Be nice if we kind of consolidate a little bit, let the EMA catch up, and then move on forward. So we'll see what happens in Waste Management, DGX. Similar candle to to Waste Management. This actually performed pretty well today considering the rest of the market. Volume was pretty strong, although that was probably the sell-off here. So I don't want to put too much stock into the volume. Excuse me, but again, we're kind of getting away from our AEMA. Wouldn't be surprised if we kind of move sideways or pull back to it, and then continue on if that's if the market kind of recovers and trends on upwards again. Last one, Capital One Financial. Not happy with this one at all either. Again, it was up, came down, still above the 8 EMA. We'll see what happens tomorrow, but got to stop at the low, just below the 8 EMA, somewhere around 98.50 or so. Don't want to let things ride forever. Trying to give it enough room to breathe without putting too much money at risk. So for me, put it around 98.50 or so, and hopefully we can bounce before that. So a couple of setups for tomorrow, mostly bearish, in case the market does roll over. O'Reilly Auto Parts. Oh, and by the way, just to show you really quick, there are a lot of stocks that tried to break out today that just didn't. Apple being one of them. It came in and just kind of cracked over it, but closed below. Tesla's another one. Almost got into this 360 zone, which it hasn't been up to in a few months, but came back down. Nike was another one. So a lot of false breakouts today, or potentially false breakouts. Actually, Nike did close above, the breakout level, came back and touched the 8 EMA, so it had a failed breakout. There was no confirmation on this particular trade. I'm trying to think of one other one. Lululemon, I don't think ever actually broke out either. Yeah, it was above it, but still can't seem to close above 81.80. So, and especially with the market like this, it's not going to. It needs to have the support of the market to get that close. So a lot of failed breakouts today as well. Now moving on to potential setups for tomorrow. So O'Reilly, very clear, classic head and shoulders pattern forming here, and the neckline has broken as of today. So this is an interesting trade. In my experience, I don't see a ton of head and shoulders. I mean, I guess I'm not necessarily looking for them. This one's just kind of glaring to me. Left shoulder, head, right shoulder, big bearish candle breaking the neckline. So if we get a close below this 100 simple moving average, I think there's a lot of room for this guy to keep on moving down. We can put our fibs in. You know, I guess we could say from here to here. That doesn't give us a whole lot. Let me just leave that there for a second. But if we look at this recent, if we look at these, support levels here, these pivot points, this looks like a good potential target if O'Reilly decides to continue to roll over. And actually, I think that lines up exactly with the Fibonacci retracement level, so that's impressive. I did not do that beforehand. That just lined up. So that's a good sign that the Fibonacci retracements are lining up with major support, as you can see from all the way back here. Whoops. So I definitely think target 2 is very realistic, which is around 226. We're at 238 right now. So if the market rolls over, definitely some potential to get down to target 2 of 226 on O'Reilly. Campbell's soup. So as I pointed out a few days ago, Campbell's broke below its 3-year support line. It broke through on this big, ugly, bearish candle on the 21st. We had some slightly bullish action here. Nothing being able to close back above this support level. Support has become resistance, and now we had a big, a pretty decent down day. So once again, if the markets roll over, I think Campbell's could continue on lower as well, given it the weakness and the fact that it's, excuse me, closed below its 3-year low. I definitely see potential targets here of 42.22 and 40.63. So something to keep in mind on Campbell's if the market decides to roll over. Verizon. So Verizon had a sort of breakout to the low side. We had this doji candle here. We broke below it, stayed below it, kind of came back up and tested the AEMA, and now we're back below this level again. So again, if the market rolls over, Verizon's looking weak. MACD is bearish, RSI is bearish, Stokes are bearish. This could come down to 46.63 or even to 44.41. So keep an eye on Verizon. And then lastly, Disney had a very ugly day today as well. We had this little breakout yesterday. Everything was looking great. Opened way down and just continued on as it looks like for most of the day. We're below the 100. We're through our retracement levels, which again, I guess it's kind of hard to say that because, this was resistance for the fibs on this leg. So I guess rightfully we would have to draw it this way. Okay, so really we need to just get through this 103.9 area, and we could come back down to 100 and then even lower if the markets roll over. So, these are ifs. These are if you want to get in bearishly, and you have to see what the market's doing tomorrow to decide if you really want to do that or not. Volatility is back up in the markets. If you look at the VIX, not quite as high as it was, but it did have a big, move up today. Whether that continues or not, don't know. But volatility is still alive in the market. It's still kind of in a downtrend overall. Today was a spike. We'll have to see tomorrow if that spike continues, or if we settle back into the market and start moving bullishly again. So I guess we'll just see what tomorrow brings. Make sure you trade your plans, stick to your plans. Best of luck trading, and have a great night.